Aloha, welcome back to Tell Us More. I'm Neaulani.kuamoo-peck, and this is my colleague,
Karen.schleif.
and we are here with part 2 about the mortgage. What do you need to do to buy a home here in Hawaii? We brought our expert, Brent Matsuda. Welcome, Brent.
Hi, thank you.
He's from Hawaii Mortgage Experts, and today he's going to tell you just about what you need to bring into him in order to get yourself pre-approved to get a mortgage.
Yeah, so definitely the first step in buying a home is knowing your buying power or your pre-approval. This information will let you know how much you can purchase, how much you can offer, what type of program you're going to have. It also gives you examples of what to expect in monthly payments, interest rates, and everything like that. So what we like to do is we like to talk to you. We want to get to know your goals. But as far as documentation, very simple. As an employee, all we will need is the 2 years of W-2s and the most 2 current pay stubs. If you own a business, of course, we would need your tax returns, 2 years of tax returns. And from there, we'll go ahead and pull your credit, look at your income docs, and we'll establish your buying power at that point.
And you know the best part about doing all of that and getting yourself pre-approved, you got peace of mind. When you go out there and we take you out there shopping and show you different places, you know whether or not you can afford to buy it. Why waste your time looking at stuff that won't work for you, right?
Exactly. So it's very important. You want to establish that buying power because when you go to the table to negotiate, you know exactly how much you can negotiate with. The worst thing you can do is go into a contract and then don't know what you're getting into and realize that this is the payments that you guys didn't want to, or you want to. It doesn't hit your goals. It's a little bit too much than you expected to pay. So, let's get that part get that part started, and the negotiation can start.
One of the biggest things that happens when you go into contract, you go into escrow, is that if you haven't been pre-approved, it's so disappointing when you fall out because the financing didn't work.
Yes.
Save yourself the pain, right?
Exactly.
But we wouldn't allow you to do that anyway.
Yeah, exactly.
Because you do have some skin in the game in that you have to have a earnest money deposit. And if you didn't do what you were supposed to do, you could lose that deposit.
Yes.
So as your professionals, we wouldn't allow that to happen anyway. So that's why you're watching this video.
Exactly.
And that earnest money deposit is just $1,000. It's not breaking the bank. So if you cannot afford the earnest money deposit, you definitely need to talk to Brent and he'll help you out again.
Exactly. And what we want to analyze during the pre-approval is your goals. What you feel comfortable with paying. Exactly. And sometimes people don't want to hear it, but we want to also keep you within a specific what they call debt to income ratio. We don't want. We still know that you have bills to pay, you have food to buy, gas to buy. So we want to keep you within that debt to income ratio percentage.
He wants to set you up. We want to set you up for success.
Exactly.
So the one thing I noticed that working with Brent was that you do give them options because
All
even
the
though
time.
they're in the same loan, there's different options that they can
Correct.
take. So maybe if you want a lower payment, you put more money down.
Exactly.
Is that how that works?
Yes, exactly.
Or they can if you want a lower interest rate because they do plan on being in there for 30 years. Can you tell us something about that?
So when I give options is you actually have the right to choose your interest rate. A lot of the times when you walk into a bank or something and they'll tell you, okay, this is your interest rate, this is how much your closing cost is. But what we're supposed to do is we're supposed to actually give you rate options. Why is there different rate options? Because each rate comes with a different cost or what they call basis point. So the higher the interest rate, the lower the actual basis points are. And from there, what we'll do is we'll give you 3 different options. Based on your financial situation, we'll make sure to put you in the right rate at the right cost for you.
So Brent, quick question.
Mm-hmm.
Can you tell us the difference between going to a bank or a credit union and going to a broker like yourself?
So the biggest difference between us is that we give you options. Again, just like we talked about earlier, we're not set in a specific bank rules. I used to work for a direct lender, and during that time, I worked for that particular lender. I had to sell their interest rates. I had to fit you into their guidelines. But now that I work for a wholesale mortgage company, broker, we are able to work for you. We shop. We have lenders compete for your business, and that way, and then of course we also find the best guidelines for you. So we have a lot of options for you.
there's so much to know about the mortgage industry that I think we should put in a part 3 in our series.
Okay.
And in that part, let's talk about the different programs like VA and conventional. Wouldn't you like to know what those programs are like?
Yeah,
So stay tuned for part 3. Aloha.
Aloha.